I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO of Inc. Research. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Thanks for having me back, Jim.
Are we having a mini rally on the Canadian equity markets?
Well, you have to go underneath the surface to see it, but yes, we are. Over the last 90 days, the Inc. Canadian Insider Index, which is what we look at to benchmark opportunity in the Canadian market, has been outperforming the S&P 500. Now, of course, Jim, it's a bit of cold comfort for a lot of investors because both the Canadian and the U.S. markets have been underwater for the last 3 months, but the Canadian market, as measured by our index anyways, has done better. It's down about 1.4%, including dividends, and the U.S. market is down about 4%. So the difference, is quite substantial in terms of outperformance of the Canadian mid-cap insider stocks compared to the U.S. So it isn't getting a lot of attention right now because markets have been weak on a number of factors, but when you look at the relative outperformance of Canadian stocks versus American stocks, we think that probably foreshadows better times ahead for the Canadian market as we kind of move throughout the rest of the year here.
What about job growth in Canada? I saw 32,000 jobs added the other week. The U.S. only 100,000 jobs added when they thought they'd have about 280,000. Well,
the Canadian job market continues to disappoint the bears who are looking for bad economic news. The Canadian economy is doing fine. The U.S. economy is doing fine. We're at the end, though, of a very long expansion period, particularly in the U.S., so we're going to get a lot of mixed signals, and we are getting that out of the United States. We're seeing sputtering retail sales, but getting some better signs on investment pickup. You're going to get these conflicting signals when you've had a long period of expansion, and Canada is no different from that. But the Canadian economy is hanging in there despite all the bad news. But again, all this sort of negativism around the Canadian economy, the Canadian market, is why we think on a relative basis it's probably offering a bit of a buying opportunity here because so many people don't believe in the Canadian market story, whether it's NAFTA, whether it's Kinder Morgan, whether it's just being overshadowed by U.S. performance over the past 7 years or so. The Canadian market's really been forgotten, written off, not enough tech. I mean, I've heard it all. So I'm sure there's a lot of bad news priced in the Canadian market right now. I'm not so sure that's the case in the U.S. market where you've got a lot of euphoria about tax cuts and earnings. All I hear about is how great the earnings season is going to be. You don't hear much, though, about the exploding U.S. government debt and how that's going to impact capital markets, or the Fed tightening, which is also going to probably hit the U.S. market harder than it's going to hit the Canadian market, initially anyways.
Yes, and we just had a report today, too. Canadian job vacancies have gone to a record 23% year over year. They can't find help.
Well, that's right, and we talked about this on the show last week. And, in the U.S. they have a similar problem, although I believe it's probably a little bit more structural in that a lot of the higher higher requirement jobs that require a high degree of skills are the ones that are hard to fill. In Canada, I believe it's probably, and by the way, this is my opinion. I don't have any hard evidence to back it up, so I stand to be corrected. I think it's a little bit more broadly based in Canada. I think our participation rate. Well, I know our participation rate. That means the people in the workforce that are active is higher than the United States. So I think the labor tightness is higher here. We're going to have the Bank of Canada well behind the curve. What I mean by that is they're dragging their feet too long here in raising rates. They've done that, which is going to create its own mix of challenges for Canada going forward. But the outlook, I think, for the Canadian economy is fine, and the job market is particularly good. If you're looking for a job right now, it really is a job hunter's market. We've heard so much about how, in the last few years, it's been, a real estate seller's market. Those with assets, those with in-demand assets to sell, whether it's been real estate in Vancouver or whether you've, have a marijuana greenhouse that, can be used for medical marijuana. If you were in that space, you had a really hot commodity. Well, the labor market's becoming that hot commodity now, and that's good news. That's really good news for the average, the average Canadian, and that's the way it should be. That's getting the economy back to normal, Jim, where it's people, innovation, and ideas that are in high demand, and the latest hot gizmo and the latest hot investment idea, is taking a back seat to what's going on in the real economy. So this is a positive development.
We'll have more with Ted Dixon right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Ted Dixon. Ted, what sectors are giving Canada this positive push?
Well, recently it's been the energy sector, and that's been a recent development. The Canadian energy space and the U.S. energy space, for that matter, have had a nice little jump here over the past week or so. In Canada, the big news is that Canadian crude oil has finally broken out to new highs. Now, your listeners can track the Canadian crude prices, which is really important for Canadian energy patch investors. You can track that on CanadianInsider.com. There's an ETF called the Canadian Crude Oil Index ETF. The symbol is CCX. And you can track that on CanadianInsider.com in real time, quotes that are provided by NASDAQ Canada. And that's hitting new highs for the year. So that's helping to reinvigorate sentiment in the oil patch. Now, the other group that's done very well and is continuing to see good insider sentiment is the gold group. It's been doing very well over the past month, and it's done very well recently. Part of that has been over, of course, geopolitical concerns, but I think, once we get past the fear of Navy bombs hitting Syria, where gold's really going to shine is once the market really gets concerned about U.S. debt bombs. And, the U.S., for all the hype I hear, Jim, I just hear this all the time, whether it's on Twitter, whether it's on business television, about how, great the American investing environment is because they've cut taxes. But, you never hear about the other side, and that is, well, no, they're cutting taxes because basically they've gone into debt, into enormous amounts of debt. It's an intergenerational transfer. It's going to have huge implications in the not-too-distant future. So as investors start to get their heads around that, gold should benefit. And, we're seeing multi-year highs in our gold insider sentiment index. It's now, last time I checked, it's over 400%, which that means that there's more than 4 stocks with key insider buying in the gold group than there are with selling for everyone that was selling. So that's we haven't seen that since you have to go back to 2015 to see that kind of insider bullishness on the group. Now, insiders tend to be a bit early. We'd like to see a peak in that indicator because that means it's peak insider buying. But look, it just means you don't rush in 100% into the sector right now. But if you don't have any exposure to the gold sector, and if you've been, waiting for, I know a lot of people have been waiting for a washout in gold. It hasn't happened. I would say that, the longer this washout doesn't happen in gold, this collapse, below, some people are looking for collapse below 1,200. The longer this doesn't happen, the greater the chances you're going to have a breakout on the upside. And certainly, we've seen a big move in insider activity here, a big move in bullishness. So, and that's not on a lot of gold stock weakness. I mean, yeah, we have kind of, we did hit some new lows earlier in the year here, but we're continuing to see insider sentiment climb as gold prices recover. So that's a decent sign. So, and you're looking at some, both big players and small players, having good insider activity, just as a fact, we've seen a lot of insider commitment at Barrick, which is, the largest gold company in the world, and, we're also seeing a lot of insider buying in smaller companies. So gold should be shaping up for an interesting story. Yes, I know there's been a lot of disappointment in the sector, and you need to have that, I think, to clear out all, the weak investors, to get all the skeptics, have them cash out, have a few shorts thrown on, and clear out the weak optimists, and now you're left with realists. And the fact of the matter is, the U.S. debt situation is a big risk, and it's not widely talked about, and that's setting up for an interesting environment for gold, I think.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, BC Premier John Horgan, Alberta Premier Rachel Notley, and Prime Minister Justin Trudeau plan to meet up on Sunday to discuss this ongoing battle of words and protesters about the pipeline that's supposed to run from Edmonton to Burnaby. Does that give you any optimism this project will get back on track?
I really don't think Justin Trudeau has a choice but to get it back on track. Justin Trudeau, I think, had hoped that events would just play out in his favor, that eventually this would get built. He's never said it will get built on any specific timeline. So Kinder Morgan has done that for him and said, you will either make sure that we have assurances by the end of May that this is going to get built on our schedule, or we're not going to build it at all. So there's a lot going on now, I think, behind the scenes that the federal government is probably scrambling to do. It's something, they should have had this they should have had this under control a long time ago, Jim. But in any event, they've made their bed, now they get to lie in it. And they're scrambling, it's interesting that they put Bill Morneau as the lead minister on this file. It's not the environment minister, and it's not the energy minister. It's the finance minister. And what that tells me, it signals A, that they're very concerned because he's one of the more senior people in the government, and two, they're probably, I don't know this is speculation on my part, they're probably negotiating with the company and saying, okay, if you don't want this asset, we know we have other people who probably do. There's no shortage of investment funds and pension plans that want infrastructure projects. So there's probably some bargaining going on behind the scenes. But what we need to do as a country, we need to get this built, and we need to get it built by the private sector. The last thing we need is the Alberta government or the Canadian government to take a stake in it. I mean, that would send a bad message that, the private sector can't get things done on its own in Canada. You need to have government involvement. I mean, we don't need sort of this, it would almost be like the China formula where, you've got to have a state-owned enterprise, in your joint venture to get anything done. No, we don't want that in Canada. We want the private sector to be able to get things done on a timely basis without a bunch of regulatory nonsense getting in the way. Yes, you need regulation, but you need to have a competitive regulatory environment so that you can get projects done or nixed, with some certainty. If you don't want a pipeline to be built, then say no, you can't build this pipeline. But if you're open for business and you say, okay, you build it with these conditions, and then you let the company get on with it. And this has not happened with Kinder Morgan. So the Prime Minister has to make it happen. He can try and negotiate something on Sunday, and I wish him well, and I hope he does. But I would say the odds are 50-50 at best that we're going to get anything from that meeting.
Well, we've heard things. Alberta's preparing legislation that allows them to cut or reduce oil shipments to BC, where in the Vancouver area we're paying $1.50 plus per liter for gasoline. There's also talk that Ottawa may tell BC, we're going to reduce your transfer payments if you don't get on board with this. And do you think that because government officials live in their ivory tower, they don't realize the impact that these high gasoline prices are having on consumers and on business already?
Well, look, it's a real shame that it's come to this, and I think it reflects poorly on the leadership that the federal government has provided on this file, that you've got Alberta, going to that extreme. And I hope it's, just a bargaining position. And I say I hope because, rationally, what do you expect Alberta to do? Sure, there's a case that Rachel Notley should be a cheerleader nationally for this project, but, that is really the federal government's job, because this is part of their national climate strategy. The fact that they have not successfully communicated that is not Rachel Notley's fault. The federal government has to take responsibility for this. And I'm sorry, Justin Trudeau is going to have to sell this project, and he should be selling it on its merits, not on threats. So I would hope it doesn't come down to, threatening John Horgan. Well, I hope it doesn't come down to having to threaten John Horgan with penalties, whether it's from Alberta or Ottawa. I hope it's a fact that it turns out to be a fact that Justin Trudeau, who's a fine communicator, is able to rally Canadians and a majority of British Columbians behind the government on this project, and that's what he should have been doing a long time ago. Well, he'll have another chance on Sunday to do that. I'm sure there'll be a lot of people out in front of this meeting, begging him to stop the pipeline. Well, he'll have a chance to explain to these people why this project has to be done, and he should have been doing that a long time ago.
Well, it seems he's been more interested in playing Mr. Dress-Up in India than addressing Canadian economic issues.
Well, this is a fair criticism, and and this is the remarkable thing about this government. I mean, Andrew Scheer in the next election will not be able to criticize Justin Trudeau over his lack of generosity. I mean, look what he's given the Conservatives over the past 2 years to run on. First we had small business tax cuts, right? Tax increases, and then they had to cut the tax to try and mitigate that disaster. Then there's been this. Then there was the trip to India, which was again a complete self-inflicted wound. And now we've got this pipeline fiasco, all self-inflicted wounds, handed to the opposition on a silver platter, an opposition that has not really distinguished itself on providing anything new for Canadians. I mean, in fact, Andrew Scheer has his own little mini problem going on right now on revelations that it was the dairy cartel that helped him win the Conservative Party vote. So, I mean, the Conservatives have not been trailblazing here up in the polls. It's been only through gifts from the Liberal Party and through the government that they're contenders. It's really quite remarkable, Jim.
Sure, and of course, at voting time, people have different priorities and maybe criticism they might have right now.
Exactly. So, I mean, but the government should not get, too overconfident about its ability to change the dial. I mean, Andrew Scheer has kind of been an underperformer here. Well, what if he ups his game over the next year, which is quite possible? I mean, he did win the Conservative Party leadership. He knows a thing or two about politics. It would be a big mistake for the Liberals to underestimate Andrew Scheer. They have to really gel here with their priorities, and they need to take control of the agenda again in a positive way. And if they don't, well, then they're risking a 1972 outcome where, the economy was doing pretty good. But they nearly blew it, and they nearly lost to Robert Stanfield. Justin Trudeau's father nearly lost to Robert Stanfield, who was, an unexciting politician, but was able to, kind of plod his way nearly into government. Well, don't write off Andrew Scheer. He's been, as I said, he hasn't been setting any. Hasn't been trailblazing here, but he slow and steady can win the race when you're against a government that keeps tripping over its own shoelaces, right?
Well, yes, the Conservatives, I don't think have anything to be proud about with the way they held their leadership vote. They destroyed the ballots afterwards, and there's lots of rumors that Maxime Bernier actually won it.
Well, absolutely, and all that stuff will come out again in the election. I don't know if Canadians will really pay a lot of attention to those sorts of things. At the end of the day, I expect Andrew Scheer will run up on cutting the carbon tax, and Justin Trudeau will have to defend it. And it will be a major challenge for the government, as particularly if this pipeline doesn't get built. So really, I think Sunday is a very critical day for this government, and it will probably set the stage for the next election, or potential stage anyways. And if they can't get this pipeline built and their message out that they can provide both opportunity for the economy and meet our Paris Climate Agreement targets, if they can't get that message out, look out. Andrew Scheer may just, sneak under the gate and end up at the keys to 24 Sussex in the next election.
Well, if you can promise a tax cut, I know the power of that. Grant Devine, back in early 80s Saskatchewan, said, if I'm elected premier, I'll get rid of the gasoline tax, and I'll guarantee home mortgages, because that's when interest rates were running at 21%. And while he was being sworn in, he said, I, Grant Devine, at midnight will remove the gasoline tax and will guarantee farm loans and home mortgages at 11%, half the going rate. I've never seen anybody follow up an election promise that fast. Of course, it did cost the Saskatchewan economy millions of dollars. We knew it would cause a deficit. But when it comes to your own personal finances, if you can save $60 a month on gasoline tax, you're going to vote for it.
Well, and the Conservative Party has figured that out. So the Liberal Party, will have to really up its game here, because that's what they're going to be going up against. You absolutely painted the picture of the next election, I think, perfectly. I think that you're going to have boutique tax cuts and a promise of getting rid of the carbon tax from the Conservatives. And the Liberals are going to have to run on their economic record, okay. But if people don't believe that has translated into their pocketbooks, they're going to have a problem. So, in any event, we've got one more federal budget. I'm sure the Liberals will give it their best shot. It'll be interesting, Jim. That's at this point. But Sunday is a critical day for the Liberals. It's a critical day for the Canadian economy too. As we mentioned at the beginning of the show here, I think the outlook for the Canadian market is pretty good, but those are primarily due to global trends, global growth. You know, in terms of where we go as in the Canadian economy, we really have to get our act together on this resource development file. We're losing ground to the Americans, and a lot of that is on the regulatory front. You know, put all this tax stuff aside. The final chapter in that book has not been written, but one thing where they are beating the pants off of us on is regulation and deregulation, and the Trudeau government has to get its head around that pretty quick.
Ted, thank you so much for chatting with us.
Well, thanks for having us back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.